Hello and welcome to another update video on gold. We are focused here at the moment on the move to the downside. I believe yesterday when we talked about the gold chart here, I communicated to you that we can see this as a 1-2 setup to the downside. After this B wave top, we had a wave 1 down and then a corrective rally in a so-called wave 2. I mean, we can debate whether the wave 2 is here or here, but I think it looks quite good as wave 1, A, B, C structure. And then we're now in the third wave, which again would be a 5-wave move. 1, 2, 3, 4, 5. That's the idea. So I communicated earlier today already in our membership, in which we cover gold as well, that the price should not break below 3,317, or we are likely already in the third of a third wave. Why is that level so important? Because it is the 78.6 Fibonacci extension of the initial wave 1. Why is this important? Because, see, when we have a wave 1 down and a wave 2 up, then always the next move down is a third wave, which should be a 5-wave move. But if we extend beyond, in this direct move down, extend beyond the 78.6 extension, it's too long for another wave 1, smaller degree. It will then mean that we are most likely already in the third wave, because the wave 1 of 3 should not normally, and again, we talk about probabilities here, not certainties, it's not a strict rule, it's more like a guideline we've developed over the years. A wave 1, because otherwise it has the same length as the larger degree wave 1, just doesn't happen normally, right? And if it has, then it becomes more likely we're already in the third wave. So that's how we distinguish between these potentials. Basically, we call that, just a 78.6 extension, like the last opportunity for the price to basically bounce and start the wave 2 bounce. That could now be wave 2 of 3 to the downside. So that's how we're tracking this. The, as I said, initial resistance area is now here between 3,347 and 3,388. What I'm going to delete now is this extension level. Don't need that. And as long as the market now stays below 3,388, the pressure is downward. We seem to have started a bounce similar to what we saw on Monday, similar to what we saw on Friday. So it could be a corrective bounce. And any break above 3,388, the 78.6 retracement of the decline, would mean that, maybe the bulls would attempt to come back, Bear in mind, we only talk about the microstructures here. I mean, bigger picture, nothing has changed. So, because the market hasn't really moved much in the last few weeks. But any break above that 78.6 retrace level means that we might test the invalidation point, which is here. So bear in mind, a test above or a break above resistance is not invalidation. We can test these levels. There might be a brief break above, but if it's not a sustained break, the 1-2 setup to the downside is a very, very plausible interpretation and scenario. Now, this internal wave 2 bounce should unfold as an ABC structure. Again, we're on a very, very small time frame here. Very small time frame. Don't really recognize much structure here. Maybe this is starting to look a little bit like a 5-wave move up, maybe a diagonal pattern. So it is possible this is the A wave. We get a B wave pullback and a C wave up. But again, this is just for orientation, not really a prediction here. Just watching those resistance levels. And it seems like we're on our way to that resistance area. Yeah. If we reach it and then we see a strong move down, like an impulsive decline, and a start, or let's say a break below 3,307, which is the intraday low, that could set the stage for a third of a third wave down. If the white count is correct, the next move down could be quite rapid. Yeah, that's just a quick update on gold futures. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you are interested in additional updates, make sure to check out our stocks membership, in which we also cover gold, silver, and also platinum and palladium as a bonus. Thanks so much. Bye-bye.